Ladies and gentlemen, good day and welcome to the Q4 FY23 and FY23 earnings conference call of PSP Projects Limited, hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amar Kedia from Ambit Capital. Thank you, and over to you, Mr. Kedia.
Thanks, Michelle. Good afternoon, everyone, and welcome to the 4Q FY23 earnings call of PSP Projects. We have the management today being represented by Mr. P.S. Patel, Chairman and MD and CEO, and Ms. Hetal Patel, CFO of the company. I will now hand over the call to the management for their opening remarks, post which we will open up the floor for Q&A. Over to you, Canon.
Thank you, Amar. Good evening, everyone. On behalf of the management, I am pleased to welcome you all to the PSP Projects earnings call to discuss Q4 FY23 and FY23 results. Please note, a copy of all our disclosures is available in the investor section of our website as well as on all the stock exchanges. Anything said on this call which reflects our outlook for future or which could be construed as forward-looking statement must be reviewed in conjunction with the risk that the company faces. Now I shall hand over the call to our MD for his opening remarks. Over to you, sir.
Thank you, Canon. Good evening, everyone. A warm welcome to all of you, and thank you for joining us on our quarter 4 and full year earnings conference call. I trust everyone is doing well and is the best of health. We did upload the investors presentation with the key quarter and year highlights on the stock exchange and website. I believe you may have got a chance to go through the same. First, I would like to discuss the key project level development during the year. Financial year 2023 has been a memorable year for the company for the perspective of addition of highest ever order inflow and for being eligible for bidding for higher value projects up to 2,500 crore single project. This is a big milestone for a company in its 15 years of operation. Going forward, we expect to leverage this opportunity and make inroads and establish our firm presence in high value added niche projects. Also, post-completion of our first ever project of Kashi Vishwanath Dam in Uttar Pradesh, we have received projects worth more than 15 crore in the state as on today, comprising nearly 60% of all our government projects in all. This has provided opportunity for the companies outside and home states. To explain in detail, during quarter FY23, the company has recorded highest ever order inflow to the tune of rupees 3,421 crore excluding GST, recording a growth of 90% over FY22. Majority of the projects awarded during the year are of the state of Gujarat and 58% of the project being private orders. The major projects awarded during the year are as below. Construction of state-of-the-art high-rise office building of Surat Municipal Corporation, corporate office building projects by leading multinational companies, 3 tallest residential projects in Ahmedabad and Gandhinagar with the increase in permissible FSI recently permitted. The government authorities we have been in advantageous position to get these orders, having proven and track record in the construction of high-rise building space. Ahmedabad Airport Development. Repeat industrial order to construct phase 2 and 3 of a noodle and chocolate factory by multinational companies. Construction of institutional campus in Ahmedabad for leading Mumbai-based management institutes. And some Vikas orders for national highway state projects from L&T. As on FY23, the company has outstanding order book of 5,052 crore. As 1 year to date, we have received further orders worth rupees 758 crore, thereby adding to our new order book. I would like to highlight here that from this quarter onwards, we have removed our 2 slow-moving projects of Pandharpur and Bhiwandi from the order book, whose total value amounting to rupees 727.31 crore. The outstanding order book as on date has grown by 40% over FY22, excluding Pandharpur and Bhiwandi projects. As far as the status of the project is concerned for Pandharpur, the client has accepted the delay on their part and asked us to resume the work. However, we have primarily refused to restart the work. We will restart the project until unless we receive our outcome. The status of D1D is that the panel of arbitration has been appointed and necessary documents have been provided. Now let us discuss on the financial performance of the company. During FY23, the major ongoing projects are at the initial stage of construction that comprises of core shell, extension and field work. Whereas the cost involved in terms of labor, machinery deployed (TC) is higher in comparison to the revenue book. In our nature of work, as the project enters MEP or interior phase, the revenue booking improves. During this year, more than 50% of our order book was at the initial stage of construction, and none of the EPC or large projects were getting completed during this year. This has largely led to a lower than expected revenue growth and margin contraction during the quarter and full year. In FY23, the revenue of the company grown by 10% against the guidance growth rate of 20% to 25%. We expect to complete the revenue backlog of this year, and we continue with our earlier guided revenue projection of 2,600 for FY24, which is as per our original guidance of 20 to 25% growth year-on-year growth. We maintain our EBITDA margins guidance still in the range of 11 to 13%. Let me quickly take us through the key developments of EP projects now. During quarter 4 FY23, the revenue booked from all these 7 EP projects is to a tune of 301 crore, and as on date, the revenue booked is 718 crore. The structure of the building is getting completed, and some of the projects MEP has already started, and interior work has also begun simultaneously. The execution is expected to ramp up during H1 FY24. 2 projects, which is Sultanpur and Sonbhadra, are lagging a little bit because the land position for the hospital buildings of both the sites was given to us a little bit later than general other 5 projects were given. So that project's extension of time limit is given as December for Sultanpur and March 24 for Sonbhadra. The rest of all the other 5 projects we are going to complete by October 2023. On the precast side, we started precast with the objective to cater to the requirement from civil construction building segment. But on the contrary, we have seen recently good orders and demand coming from the infrastructure side as well. Considering order book from industrial as well as construction side, the board made a decision to extend the existing precast facility. Also, in many of our existing projects, the company has started supplying certain materials through a precast facility, which shall help us to achieve faster execution and aid us in maintaining the quality as well as speed of delivery. During the year, we received a safety award from National Safety Council of India in recognition for appreciable achievement in occupational safety and health during the year 2021. We at PSP Projects have optimum focus on quality and timely completion of the project. I am pleased to inform my stakeholders that the company has been able to leverage on this philosophy and has been able to deliver quality projects within the timeline. Here, I will take an opportunity to heartily thank PSP Projects family and entire team for believing in our philosophy and working in a synchronized fashion so as to deliver quality projects to our customers. This is evident from the repeat orders that we receive on regular basis from many of our private companies' clients. Company has completed 205 projects so far since company's inception in 2008, with 84% private projects consisting of institutional, industrial and residential projects, and balance 16% as government projects till now. As on FY23, out of outstanding order book of 5052 crores, the government projects completed comprises of 56%, and private project comprises of 44%, which comprises again of institutional, industrial and residential projects. As on date, we have 47 ongoing projects, of which 74% is based in Gujarat and 26% is based in UP. Big pipeline. Going forward, we have a pipeline of approximately 6,000 crore, of which 67% is from private projects and around 20% is from the state of Gujarat. The International Monetary Fund (IMF) says that the Indian economy is surviving against the global headwinds and is expected to do well. India is expected to maintain its position as one of the fastest growing economies in the world in FY24, and this puts India in a bright spot. In FY23, we saw good increase in investment announcement by the private sector. A pickup in private capex adding into India's growth story. We at PSP Projects are confident and positive for the growth in our business segment also. With this, I conclude my remarks, and now I would like to hand over the call to Ms. Echal Patel to take us through these financials in detail.
Thank you, sir. Good evening, everyone. The financial performance during the quarter ended March 31st, 2023, as on standalone basis are as follows. Quarter 4 FY23 versus Quarter 4 FY22. Revenue from operations for the quarter is at 727 crores versus rupees 555 crores. This is increased by 31% on YY basis. EBITDA for the quarter is at rupees 78 crores versus 88 crores, which is lower by 12% on YY basis. EBITDA margin is at 10.67% versus 15.87%. Net profit margin for the quarter is rupees 46 crores versus rupees 52 crores, which is lower by 12% on YY basis. PAT margin is at 6.3% versus 9.4%. We'll brief about the full year figures, FY23 versus FY22. Revenue from operations for the year is at rupees 1927 crores versus rupees 109 crores for FY22, which is increased by 10%. EBITDA for the year is at rupees 225 crores versus rupees 257 crores, which is lower by 12%. EBITDA margin is at 11.68% versus 14.67%. Net profit for the year is 133 crores versus rupees 161 crores, which is lower by 17%. PAT margin is at 6.81% versus 9.10%. As informed by PSS, in FY23, majority of the projects were under initial stage of execution as company's order inflow of FY23, which was 3,420 against order inflow of FY22 of rupees 1,802 crores. Further, the FY22 revenue comprised of revenues from major projects like Surat STB, Kashi, and BSC, which were at the finishing stage, having high profit margins, and no such major projects were completed during FY23. This can be the major reason for lower EBITDA margin compared to FY22. Increase in employee expense is mainly due to increase in employee strength from 1,345 employees as on 31st March 22 versus 1,883 employees as on 31st March 23. Increase in finance costs during the year can be attributable to increase in utilization of fund-based limits, increase in interest rates, and issuance of bank guarantees for newly awarded projects. Increase in depreciation can be attributable to addition in fixed assets during the year, which amounted to 72 crores, 72 every year. The CWIP balance in the balance sheet of rupees 17.7 crores is towards the expansion of precast facility to meet requirements of new orders. Would like to mention few of the important balance sheet numbers as on 31st March 23. Long-term borrowing 70 crores, short-term borrowing 75 crores, gross block of assets 413 crores, and net block of assets 238 crores. Addition during the year 72 crores, which includes the purchase of capital assets for new sites. Net amount due to customers, that is advance billing, amounts to 78 crores. Net unbilled revenue 257 crores. Retention non-current retention current 34 crores. Mobilization advance stands at 245 crores. We'll mention about the working capital days. Debtor days are 82, creditor days are 70, inventory days are 29, total net working capital days are 41. Increase in inventory, trade receivable, trade payable are in line with the increase in sales in quarter 4 FY23 and increased order inflows during the last quarter. Out of total credit facility of 1,047 crores, the company has utilized 897 crores, of which 74 crores are fund-based utilization and 823 crore is non-fund-based utilization. As on 31st March 23, the company has total fixed deposit of 331 crores, out of which 3 deposits are 76 crores and FDs worth 255 crores are under lien with the bank for credit facilities. Work on hand as on 31st March 23 is 5,052 crores and detailed bifurcation is available on the uploaded presentation. That concludes the update on financials, and we are now open for the question and answer. Thank you.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
Yes.
Good evening.
Good evening. Yes, sir. So, can you give more color on this 6,000 crores of big pipeline? What are the segments or sub-segments in which you see this pipeline? Since you are mentioning 60% of it is in private, is it come through competitive bidding or through negotiated basis? And do you expect these projects to come in at little higher margins than what we did as margins in FY23?
The bid pipeline, what I said about is about approximately 6,000 crores. So there are one project in Navi Mumbai, which is Gem & Jewellery Park, MP Chambers in Central Vista, Gem & Jewellery Park, which is 2,500 crores, MP Chambers Central Vista, that is 1,200 crores. Then there is residential project at Ahmedabad, 450 crores. IT Park in Chennai, which is 400 crores. Government office in Odisha, that is 400 crores. One private club in Chennai, which is 300 crores. Commercial building in Ahmedabad, which is 300 crores. Garoi Package 2, which is again 300 crores. Garoi Package 1, we are already received the order last week only. Residential in DIP is 100 crores. So this totals to about 6,000 crores. As you asked for me for the margins, because it is going to again come with the competition and their competition with tender only. But yes, I can tell you that much, that will be in the line with what we have been doing till now.
Okay. And in the pipeline that you just mentioned, there are a fair bit of residential projects. In the strategy, is it like we would take advantage of the new launches by residential developers that's ongoing? Is that a strategic pivot that we are seeing?
Most of the residential or commercial projects which I talked, this was purely based on the core and shell part. See what has happened, the permission for 30-story plus up to 35-story has been given in the state of Ahmedabad or state of Gujarat last year only. So any developer who is wanting to go for a high-rise building or plus above 30-story, we are only one of the person who has carried out work of 30-story plus in GIFT City. So there are some such types of inquiry, and that inquiry is coming because of our credentials and what we have delivered till now in terms of high-rise building.
Okay. Coming to the cost structure, So what percentage of our order book has a fixed price kind of agreement, and what percentage has passed through? Because this FY23 we saw decrease in margins, and that's why I'm asking.
See, Varun, the decrease in margins was already been clear that is because of the whole year we were carrying on the projects which were more on core and share. Last year, if you compare the balance sheet, the profit margin was much high because our large size project of Surat Diamond Boost, Kashi Vishwanath project, and Bombay Stock Exchange Forum. All these three projects closed at the end of the March 22. And that was the reason that, as I said, when you are doing a lump sum contract, most of the milestone payments get converted. Milestone payments are recognized at the end of the project. So that was the major reason. And in this year also, whatever which we have missed in, which I was expecting to be completed before March, but some of the other reasons we are getting delayed in UP. So that revenue is going to come in the first 2 quarters of this year. I think there won't be any problem in terms of margins just because it was a lump sum contract or an EPC project. It is mostly on the what level of execution is going on or what type of execution is ongoing on which of the projects. If you compare right from March 23 to March 22 to 23, this whole 12 months, you must see that most of the projects, some of the Nayaka Sports Complex started in April. And then whatever projects which we have started, each and every project is in core and share. And as I said, there are 2 projects which have got delayed in UP also, which was also because of the land available. Land was given to us little bit later than the other 5 projects. So it is not only about lump sum projects are getting hampered in terms of net profit.
Understood. So what you're telling is because of the nature of work that is primarily related to
nature of work which is going on in the project. Yeah.
Okay. But just to get the number, which is basically percentage of order book which they pass through, that will be helpful.
I exactly don't have that number, but the large project which I said about 13 and 15, and out of 5,000, there must be 50-50. 50 will be item rate. 67% is item rate, and rest of the 33% is lump sum.
And item rate contracts have passed through.
Yeah, that has passed through. Yeah.
Okay, I will come back in the queue. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Sir, just again trying to harp on the same thing in terms of the margin and the revenue, though we said that the projects were at initial stage and that's why the margin were lower versus which was not the case. But sir, in the last con call, we should be aware about these things. And we were looking at close to 900 crore kind of a revenue in the 4th quarter, and we have done 727 crore. So just trying to understand in terms of the confidence that we are still giving a 2,600 crore revenue guidance for FY24. Again, wanting to understand how much delay can happen in this number. So what's the risk in this number?
You are absolutely right that the commitment which I gave was near to 900 crore and we have reached to 723 crore only. But the point here, it was not something which we have learned also. The previous few years, we were having a large project of Surat Diamond Boost that was at a single location, more than 1575 or more than 1800 crore project at one location. This was a 1600 crore project, all in all as UP, which comprises of seven projects, which again goes back to 14 sites. So that has given a little bit pain to us in terms of execution and managing the things at 14 locations. And as I've already been saying since last 1 year, there are few issues related to consistency of availability. There is a few issues related to getting the approvals of the material on time. Since these are all government projects and when there is a lump sum project, you can understand that the government are taking too much time in approving the things because it's not an item-based contract. So there are two things which has happened, and again I will say that we have learned from this thing that we should be committing to things which is possible. And now whatever figure which I am saying today would be achievable, and that's the confidence which I will go with, because again and again we can't fail in terms of our words what we have been doing till now since last 6-7 years.
Okay, got it. That's helpful. Second thing is just wanted to understand these two UP projects where there is a delay, Sultanpur and Sonbhadra. So what is the value of that project, particularly the two projects?
Those projects are in the range of 250 to 275, and that these two projects I am saying is only the medical college part. So it will be 50-50. So you can say the overall project value for both the hospital building will be in the range of 250 crore.
Okay, got it. Got it. And Surat municipal project, I can see we have done close to 69 odd crore revenue in this quarter. So there,
Mr. Shah, there is a background disturbance from your line.
I am using handset. Is it fine?
Sir, it's not our handset. There is a background disturbance. There is a lot of disturbance behind your back.
There is nothing like that. Maybe a network issue.
Please continue.
Yeah. Sir, on Surat Municipal Corporation, just wanted to further understand. Last time we said 300-350 crore kind of a revenue. So this quarter already we have started the execution, 69 crore. So that should be doable, 300-350 crore revenue in FY24.
Yeah, we should be. We have planned accordingly, and we should be able to reach by this year's 300.
Okay. And in terms of the order inflow, so already 700 crore plus we have received. So two clarity needed. First is 350 crore, 345 crore. L1 was there, Gujarat tourism project. So is it still L1 when it will be converted? And what kind of a total order inflow we are looking for this year?
Yes, the day before yesterday only, I think we have declared that order has been converted, that loads has been converted into order. So we have already received that order. And the bid pipeline which I showed was staying at the whole package 2. The package 1 we have already received, and package 2 we are bidding. In all, it is the 1,200 crore investment on the government side, divided into 3 packages. Out of that, one first part is already given to us, and second part we are bidding.
Okay, so
overall projection, again I would say whatever revenue we are going to generate, that is 2,600 crore, we can consider 25% more than the revenue that we are going to make in this year. So that will be in the range of 3,000 plus.
Okay, got it. And in terms of the working capital, I understand though net the number of days still is at what was there in the December, so slightly lower, 41 days, but still on a yearly basis the number has slightly increased. So particularly on the data days. So last time also we said post the December we have received some money. So this time again is the same case that as on March there was a data, and post March we have received the money. So that's why the data days is on the higher side. So there is a possibility of the overall net 41 days can reduce to 32 days?
Yeah, we can say, because as we said, we have already received out of 31st March outstanding from UP itself, we have received around 100 crore. So, and other projects also receipts are there. So it happens like means within the first month or 1 or 2 months, we are receiving whatever March outstanding is there. So it may be streamlined to 30 to 35 days.
Sir, the participant has left the queue. We move on to the next question, which is from the line of Ash Shah from Elara Capital. Please go ahead.
Hi. Am I audible?
Yeah.
Yeah. So I have one question. So we, in the capital work in progress that ma'am mentioned, that 17 crores is towards precast facility. So are we like moving on to the phase 2? And if yes, then how much capacity addition will that be? I mean, we are already doing 1 million, if I'm not mistaken. So can you just throw some light on that?
Yes, as I said, that precast facility was created with a view to start on buildings and industries and buildings and warehousing. But later on, when we started off, there are few requirements which is coming up on the infrastructure side. The largest order which we received was from L&T as bullet train to supply of these data ducts and electric ducts. Same way, there is a huge requirement for infrastructure in terms of stormwater drainage, which you must be seeing along parallel to the roadside road on both the sides. So those types of things are now getting compulsory at the government level. So we thought of making them more safe, so that at least our building, the precast building facility is not hampered by doing the infrastructure work. As the infrastructure requires only the space for putting the molds, whereas the building requires all types of machinery and all types of molds, which is already been installed in the first plant. So to cater more orders from the infrastructure side, we have created this new shed.
And if you could just give us the revenue that we have incurred from precast facility for FY23 and margins if possible.
See, last year I think actually we are not able to exactly specify what is the revenue which we generated, but the figures of the deals and the some of the things which we have done for captive, it was in the range of 75 to 80 crores. And this year also what the order which we are executing will be in the range of 200 plus crores or maybe 250. That's the order which we are planning to execute this year, which is only an outside order related to infrastructure or building.
And last question, if I see your L&T project, it has been stuck at 195 crores only for the last 3 quarters. Is there any delay in that? If you could just throw some light on that.
Because this facility was created only for L&T to start with there. So we have already started giving them the product. Yes, it is little bit 45 to 60 days delayed, but that was majorly because of the molds which were there compulsory to be bought imported. That molds was agreed as with the L&T that they will require an imported mold, and the delivery of the mold has been delayed by 1 month. So that overall delivery of the product is delayed by 45 days. So probably that we will recover by working 24 hours, and there won't be any problem at the end of the day, at the end of the project.
Thank you. That's all from my side.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities and Finance. Please go ahead.
Yeah, hello, sir. So we have already utilized 897 crore of the fund limit. So, and we have 1,047 crore. So when we talk about 2,500 crore or 2,500 crore revenue this year, so do you expect this BG will increase? Limits will increase, or it is enough to do the 2,500 crore?
Yeah, for that we have already applied to the bank and we have received the assessment note, and our lead bank has already approved a further extension of 450 crores. So we are in the process of tying up with the bank, so it will be over by 1.5 months.
So do you expect this 450 crore you will get in next 2 months?
Yeah.
1 month or 2 months actually. Yeah.
Okay. And this UP Medical College, the remaining 770 crore, we will complete in FY24 itself? Or some part will? Okay. So
only the project of Sonbhadra, which was given as an extension of time limit by up to April 2024, rest of all the project will be completed before that.
Okay. So Sonbhadra, what part will be left? About 100 crore?
That is the hospital building only, and that will be also at the last finishing stage. So but not much in terms of revenue will be left out. But as the extension of time is given as on the April 30th, as 2024, so I am saying it will be one part may go beyond that FY24. The rest of all the hospitals will be completed by FY24.
And out of this 5,000 crore, we are executing all the projects or received the BG limit for all the projects as of now?
Can you pardon?
We are executing. All 5,000 projects are under execution.
So any project is not left for not awaiting wage limit?
No.
I think everything.
We have spare limits of around 100 crores. So as of today, these numbers are as on 31st March. So we have that much.
Okay. Thank you. All the best for you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 to 3 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Devang Patel from Samiksha Capital. Please go ahead.
Hi, sir. I wanted to check if for Surat Diamond Bourse, we've received the final certificate and we are now eligible to bid for Central Vista. And on Central Vista, you mentioned 100 crore project, but generally, what kind of opportunities for the next 2 years, how many packages, sizes do we expect to come up?
Yes, we have already received virtual completion from Surat Diamond Bourse, and based on that certificate only we have bidded for this MP office, where will be getting qualified. But yet the process of pre-qualification is on. And as we have got that certificate, we will be able in position to bid for projects of size of more than 2,000.
Sir, and what kind of packages do you expect to come for Central Vista?
Again, Central Vista, we can't envisage on what type of packages it will come, but it will be in the range of 750 to 1,500 crore packages minimum. And on the large side, it can go up to 2,000 single package or 3,000 single package as it was given to L&T for 3 secretariat buildings. If they come up with 2 secretariat buildings now, it will be in the range of 2,000 crore. But that the package size we are not able to envisage. That is because absolutely government call or a CPWD is call.
So my question was more like what kind of opportunity size will come up for us in the next 1-2 years?
That I said, if the project size is up to 2,500 crore, we'll be able to bid. And if the project sizes are beyond 3,000 crore, we'll fight for that 3,000 crore package. But up to 2,500 crore, such as 500 crore package, any which is coming up in Central Vista, we'll be able to bid for that.
Okay. Sir, and secondly, on precast, you said you've given some details earlier. I wanted to understand what kind of capex we need to do now, which will give us what peak revenue. After that, how much will be internal consumption?
See, actually, internal consumption is not something which we bid for a precast project. It is usually as and when required, depending on the client's emergency to get some work done through precast. Otherwise, it is very difficult to envisage on existing projects to be converted into precast. But as far as the precast market is concerned, after doing these warehousing facilities for Godrej, we have already received one more order of, we are already in discussion of 3 or 4 more orders of Godrej in and around Ahmedabad. So, and there is also few inquiries of this stormwater drainage ducts, which is coming up in the GIDCs and general road project, which we are already doing as a data duct and electrical duct for bullet train L&T. So this is something now market is picking up. Now people are understanding how fast precast can be done. We are also doing one building of ground plus 7 in Ahmedabad. Once that building is ready, we are hoping that there will be few inquiries on building further.
So you mentioned taking board approval, so that envisages how much capex and revenue potential?
I think we have to plan for about addition of 45 crore capex in that part. So out of that 17 always already been booked in this year. The rest of the thing will come in, 25 to 30 crore will come in the next 2 quarters.
All right. Sir, lastly, did you, I hear correctly that inflow for next year you're saying will be more than 3,000 crores?
Yeah.
Okay, sir. Thank you. Thank you, sir.
Thank you. The next question is from the line of Navid Virani from Bastion Research. Please go ahead.
Hi, everyone. Am I audible?
Yes,
Yeah, speak a little louder.
Yeah, so thank you for taking my question, and firstly, congratulations for registering such a strong order inflow this year. So, firstly, I wanted to understand regarding the industry. So, there is a lot of data points coming out saying that the infra opportunity in India currently is larger than ever. So just wanted to understand from you as to how is the industry looking at this point compared to, say, 3 to 4 years before. So if you can quantify, say, X number of projects on average were up for bidding, say, 3-4 years back, which has climbed up to, say, a larger number because of the infra opportunity which India currently provides.
Yes, but the market is concerned, last year's order book, wherein we have received mostly all the orders from Gujarat. That itself speaks about the economical growth of Gujarat and economical growth of India when we talk about so many medical colleges coming up all over India, because government has decided to go for all medical colleges in single. All the districts should have one medical college. All metro cities all major states should have these aims. IIT is also coming up. So on education and health, they are already decided on spending so much money. And as far as capex related to private organizations, we have been working with so many private organizations and private corporate, and the repeat order of this middle sector itself speaks about that there will be a huge capex coming up from private corporate, as we are doing for this SR also, that is the Arcelor and Mittal steel plant expansion, where there are 3 or 4 more contractors are also working. But as for the overall inquiry level and the present bid pipeline of 6,000 crore, you can easily identify the level of inquiries and the level of development which is coming up. So I would say that if you compare 3-4 years back, there were not such a huge inquiry in terms of private or government. But now we can say that both the levels, government and private, there are huge inquiries. And the same thing has happened in the real estate sector also. There is a large inquiries coming up. And there is a new development, as we said, the redevelopment of private projects or redevelopment of government buildings. That's also going to be a big amount of that in the next 2 or 3 years.
Thank you for such a detailed answer. Secondly, wanted to understand that during this year, the cash flow from operations this year has come out to be slightly weak. So can you explain what created this trend? What going forward should be the conversion rate, if at all you can give some guidance over there?
Yeah, if you just go through the cash flow from operations compared to previous year figures, it has come down mainly due to increase in receivables and increase in other assets, which mainly comprise it of amount due from customers and then retention money. So even inventories has also increased. So this all has resulted because majority of new orders, as 3,000 crores of orders we have started during the year. So because of that, cash flow is compared to previous year, the cash flow is lower. And also infrastructure expenses incurred for all these new projects.
Okay. So will it be fair to assume that the cash flow run rate going forward will improve compared to this?
Yeah, it will streamline over a period.
Okay. These 2 were the questions from my side. Thank you and all the very best.
Thank you. The next question is from the line of Ash Shah from Elara Capital. Please go ahead.
Thank you again. So I had a question on the Bhiwandi and Pandharpur project. So you said Bhiwandi, there is the arbitration going on. The arbitration has been started. So can we expect any timeline for the same, and how much amount are we claiming for in the arbitration?
The amount is not, we can't declare what is the amount which we have claimed for, but yes, it will be recovering over all the losses which we have declared and which we are now already booking in our books also. So it will be, our all losses will be recovered in that claim which we have made for Bhiwandi. As far as timeline is concerned, again, there is a law regarding arbitration law wherein government is pushing each and every arbitration to end by 1 year. So let us hope that it should be concluded in this 1 year only. As such, our claim is not based on some technical criteria where the building has been done and some technical issues. It is purely based on the issuance of the land. So probably it should close a little bit early than what general arbitration claims usually takes time.
And how much losses have we booked till now for Bhiwandi?
Yeah, we have booked around 9.5 crores losses.
Okay, and coming on to the Pandharpur project, so the client, how much?
Pandharpur, as I already given in my opening statement, that project they have asked for starting up with the view that we invest further more, so that the project is completed and they are able to sell it to the people. But as a listed company, we were a contractor, we are not the investor. So we have asked them not to, we can't go ahead with putting up more money when we already have a due of more than 16 crore. So they have to decide how they are going to pay, and we have refused to continue by putting up more money.
So is there any chance that we can have this project back online after a quarter or two?
If it goes on like this, we will again go into arbitration for the same reasons what we have done in Bhiwandi.
Okay. And what will be the capex number for FY24 apart from precast?
It will be in the range of 3 to 4%, which usually is also the right figure for us. So whatever revenue we make, we can say it will be in the range of 70 to 80%.
Okay. Yeah, that's all from us. Thank you.
Thank you. The next question is from the line of Nikhil Kanodia from HDFC Securities Limited. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
Yes, sir.
Sir, first of all, congratulations on the highest ever order inflow. Sir, pardon me if I would have missed your guidance on the revenue front, margin front, and the inflow front. So can you please repeat that?
The revenue I said about 2,600 crore. As far as EBITDA and the PAT level margin will be in the same range. EBITDA will be in the range of 11 to 13%. And as far as the projection of inflow of order, we should target for 3,000 plus.
3,000 plus crores of order inflow you are guiding, right?
Yeah.
Okay, sir. Thank you.
Thank you. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yeah, thanks for the opportunity. Yeah, my question is to Madam. Ma'am, our long-term debt has increased from 17 crore last year to 38 crore this year. So are we expecting more increase in the long-term debt, or it will remain the same?
No, we will not be expecting any further long-term debt. This is mainly to contribute to this precast addition and a few frames and other routine equipment.
Okay.
Sorry?
Okay. As far as last quarter interest rate was 92 crore, so we expect same run rate going forward also?
Quarterly inflow. Sorry, I could not get your question.
Yeah, interest, total interest in last quarter was 9.2 crores. So that run rate will go in the following quarter also? For interest amount.
Interest, we are talking about financial expense, finance expense?
Yeah, financial, Yeah, madam, yeah. Interest on date.
Same rate.
Same rate. Okay. Oh, okay, ma'am. That's all from my side.
Yes.
Okay, ma'am. That's all from my side. Thanks a lot.
Thank you. The next question is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. So first question is about Central Vista. So are you seeing do you expect margins in Central Vista to be similar to your overall guidance that you gave, 11 to 13%?
It is a general bidding criteria which we usually try to maintain what are the costs and what are the overheads which we incurred in a large project. So the margin criteria remains the same as far as our bidding criteria remains the same. So it is not about because of Central Vista the margins are a little bit less or margins are a little bit high because it's a Central Vista. So it depends on the expense side and the complexity of the project. We calculate our overheads and profits. So that is remains in the same guideline what we have been doing till now.
Okay. And how many players, how many competitors were there in Central Vista project that we have bid for?
Presently now, if we talk about project sizes more than 750 to 2,000 crore, I think will be 4 or 5.
4 or 5 players?
Yeah.
Okay. And you said out of 1,200 crore the project that you have bid, there are 3 packages and 1 you have already received. Is that correct understanding?
Yeah, that is on the Daroi project package. Daroi is there is a development on the tourism side. There is a sports activity side which is going to be developed on this dam side of Daroi. And on the downstream, there will be resorts and other activities for the tourist people. So there is 3 package which is coming up on package 1, 2, and 3. Total investment which government has already declared is 1,200 crore. So first package we have got, second we are bidding, and third will come within maybe further 2 or 3 months.
Okay. And sir, of the bid pipeline that we have, what is how is the share of industrial and residential in that? Is it higher than our what the share we have in our project?
What is the percentage, but can we let you know if you ask the best questions to me. I don't know the ready percentage. Out of the 6,000 crore, what is the percentage for each? I have not heard.
So not only in general, how are you seeing the activity in the real estate and the industrial side? Are the orders or the demand picking up there, or do you think it's still?
I think it is again a question to which we people can't envisage or predict on anything, because there are few expansion which is coming from corporate. There are few projects which is being announced by government which comes on gradual basis. There are few developers who, after completion of one small project or the other project, they come up with a large project. So this is again depending on the development. There's such data available on the website like infrastructure investment of government. So when we are working on private sector, building data are not available on the each and every government side. What is that being considered for the budget?
Sure. And sir, how much retention money release do we expect in the next 12 to 18 months?
We have bifurcated around 34 crores in current retention money, so we expect that much to be released.
Oh, the current one that we expect. Okay. And non-current of that, how much do we expect in the next year? All of it or just some part of it?
101 crore, which may come up over a period of 2 years, next 2 years.
Over a period of 2 years. Okay. And in terms of the finance cost that we had in this quarter, so last quarter we did somewhere around 500 crores in sales, and our finance cost was around 10 crores. In this quarter, we did 730 crores of sales, and our finance cost was 9 crores. If you can help me understand, I mean, despite the higher execution being on the very high side, finance cost is the same.
Last quarter, we utilized the fund-based facilities on a higher side, and this quarter it was on a lower side because we have received mobilization advances from major new customers.
Okay, so we didn't have to use the working capital limits, right?
Yes.
Understood. And the 2 delayed projects that you mentioned in UP, now they are back on track, right?
Yeah, it is already on track since last 8 to 9 months. Only the position of the land at the initial stage was delayed by 1 year.
Right. And sir, one final question about other income. We have been reporting somewhere around 5 to 8 crores of other income every quarter. Is this something that is related to the core nature of the business, or is it non-core in nature? How is it? What is it?
Yeah, you are talking about other income, right?
Other income, yes. What is the nature of it? What is it?
Over a period of months, during this year, the FD interest has increased. So even our FD has also slightly increased compared to the previous year, and at the same time, that interest rate has increased. So that can be the reason for increasing other income. And we have some of the mobilization given to our subcontractors. So we are getting interest from them also.
Understood. And whatever mobilization advance that interest on mobilizing advance that we pay to our customers, that is recorded in the other expense?
Yeah, that is in finance cost.
Finance cost. Okay. Understood. Thank you so much. Thank you. Thanks for the answer.
Thank you.
Ma'am, can we keep 7th question as the last question for the call? Or anybody else who wants to know more about out of this queue of 4 people? Can you ask anybody else who wants to ask a new question? Or then otherwise we keep 7th question as the last question of the call?
I hope the participants have heard the management. Please come up with a new question. Sir, can we take the next question now?
Yeah.
Okay, sir. Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, in bid pipeline, we have already mentioned the projects. Just wanted to understand, are we have started looking at any other state where we want to go? So from Gujarat, Maharashtra, UP, or Delhi, any other state are we looking at?
So, it is not about how we are looking about any state. It is always about the opportunity and the type of competition, which I have been telling since long. Whenever we explore a new state, we always try to see what type of work it is and what level of competition it will be for that project. But yes, whenever we bid for large projects outside Gujarat, we usually try to maintain that the size of the project should be substantial so that we can have a justified expense on the infrastructure side and the management side. If the project is small, it will not work for us. But yes, if it is a large project, we will bid for that project. And in this bid pipeline, only there are 2 projects which is out of state. Rest of the projects are from Gujarat only.
Okay, and this Gemson Jewelry project is 2,500 crore or 1,200 crore?
It is 2,500.
And when it likely to be awarded?
Maybe by 1 or 1.5 months. That's what we are talking, and that's what we are knowing about the project.
Okay. And second, sir, on the SPV for front, is there any limit that we will be getting? So our any limit will be free in next 6 months for the SPV?
Yes, I think security.
No. Actually, performance fee will get released in 24 only. So still 1 year to go.
Yeah, because it has a deferred liability of 2 years. So June was our first year virtual completion. So in this June it will be 1 year completed, and June 2024 it will be 2nd year of deferred liability. So we'll get that money after that time.
So how much broadly 150 odd crore we will be getting?
80 crores.
80 crores. Okay, got it. Ma'am, last again repeating the retention money, you said 107 crore plus 34 crore. So put together it is a 141 crore.
Yeah, it is 101 plus 34.
Okay, 101 and 34. And unbilled revenue you said 216 crore.
257.
257. Okay, 257. Got it. Thank you, ma'am, and all the best.
Thank you. The next question is from the line of. Sorry, sir.
We are taking last 2 questions, or we are continuing still with?
Yes, sir. We'll take last 2 questions now. I'll announce it. Okay. Thank you, sir. The next question is from the line of Rishabh Shah from RBSA Investment Managers. Please go ahead.
Yeah. Thank you for the opportunity. Sir, I just, currently PSP is around 2,000 crore top line, and so in the near future we might reach 4,000 to 5,000 crores. So just had a 2-part question in this regard. Is it possible that we reach this number only from building construction and the areas that we currently operate in? And secondly, at that scale, which areas do we need to, do you think we need to strengthen further, and what challenges would we if we be facing at that scale, and how will we tackle it? If you could share your thoughts, sir, on these 2 questions.
You meant to say when we reach top line of about 4,000 to 5,000, what will be the challenges?
Yeah, first question is it possible to
diversification to reach to that level?
No, I had a 2-part question. The first was, will we be able to reach that top line with the current area of work in building construction that we are in, or you might need to add some other capabilities going forward? And second was, what challenges we might see at that scale, and are we ready to face maybe at this labor level or maybe at the senior management level? How are we going to tackle those issues at that scale?
Yes, and when the company grows with the pace of 20 to 25%, you are always going to get some of the people which are getting the experience in the company's culture. So if you maintain that pace, that is something which is achievable. Only the challenge, which again I would say, that will be the execution capabilities of the company, and that goes by again human resources. So that will be the biggest requirement at that can be a biggest threat to a good company when execution is being done through a good quality people at the administrative level, at the supervision level, at the managerial level.
Okay. And sir, there is some news flow regarding increasing minimum daily wages by Gujarat government. So is it in force right now? What are you seeing an impact on the margins? What is the status of this?
No, as of now it is not in force. It will be enforced soon. But as and when we bid for a new project, we always consider that as a part of the expense in future.
Okay. And sir, this railway station redevelopment, does it fit the bill, sir? Are we looking to bid such projects, or it's not? We're looking at currently.
The tender is yet to come, I think, but we are waiting that if we are able to qualify, we'll be able to bid.
Okay. And so just last question, then say suppose Gujarat versus other states, how is the competition intensity? Is it the same or is it increased in the last 6 months or so?
When the size of the project is up to 500 crore, each and every state has its own competition at the lower level with the local players working in that area or that state. But when the sizes of the projects are more than 500 crore, probably these 5 or 6 companies which is working on top line, they always come and bid for the type of project. But again, if we are working here more in Gujarat, the companies like companies who are stable in Hyderabad may not bid for projects up to 500 crore or 700. So they plan for bidding for projects of more than 1,000 crore when they are quoting in our state. So it depends.
Okay. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Balkrishna Vargasia from Axanoun Investment Management. Please go ahead.
Good evening, sir. I have 2 questions. First is regarding the SMC building project. So what is the completion date for that project?
I think it's a 3-year project. So we have just started in March. I think we have got order in March. So it will be 24, 25, 26 March.
Okay. And the second question is related to retail malls that are coming up. So, for example, Lulu Group Mall in Ahmedabad or Phoenix Group Mall in Surat. So, are we bidding for those kind of projects?
Shopping mall.
Yeah. So there are 2 malls which is coming up with the one mall which was a Phoenix. We have been done in Gujarat, in Ahmedabad. There is one more mall which is going to come up in Surat. So we'll be bidding for such types of projects where it is coming from a large mall developers or a large investing companies like Network or Phoenix.
Okay. That's all from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to Mr. P.S. Patel for closing comments. Over to you, sir.
Thank you everyone for your continued support and bestowing trust on us. We hope that we have been able to address most of your queries. In case of further queries, you may reach out to our investor solutions advisory and they will connect you offline. Thank you, Amar, for hosting our call. Thank you again. God bless you.
Thank you.
Thank you, everyone.
Thank you, ma'am. Ladies and gentlemen, on behalf of Ambit Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.